It's about that time of day again. My name is Joseph. Monday evening, July 30th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish, the spike and range pattern tonight, and that tells me to look for buying opportunities using seller failures down below the range low tomorrow morning. The S&P is bearish and trying to hold below a key range tonight, and I have my eyes on selling opportunities, but I'm waiting for a test of a hidden channel up overhead tomorrow morning. Nasdaq is also bearish and trading right in the middle of a spike and channel pattern. That tells me to stay patient, stay away from that middle, and look for more reliable selling opportunities up at the highs. I'm going to use that 2-try rule for a buyer failure tomorrow morning on the Nasdaq. Gold is also bearish and trading sideways, the triangle this evening. That tells me the most reliable selling opportunities will likely be above the range highs using buyer failure patterns tomorrow. And how could we forget about the euro tonight? Euro is bullish with a strong run higher today, but at last week's trading range, that's the big clue on this chart, and that tells me to look for buying opportunities back down at the lows of that range tomorrow. Get a great chart on the euro, so make sure you stick around for that towards the end of tonight's video. Speaking of tonight's video, boy, oh boy, are we already ready to wrap up this month of July. Last day of the month, right around the corner, and as always, we get a bunch of volatility, a bunch of opportunities setting up for tomorrow, and I got a great video newsletter in store for you guys and gals tonight. Before we jump in and put the plan together, though, for tomorrow's last drop of the month of July, yeah, right, and the crowd goes wild, right? I do want to remind you guys, if you're watching me on YouTube tonight, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links, the description of the video. Also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing. And if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at Sideways Markets. It's where all the action happens every day. Again, I'll put all the links in the description of the YouTube video. Head over here and join me here on the blog at Sideways Markets. Join our mailing list. Give me your name and your email address, upper left-hand corner, and I'll send you an email every time I publish something new. If you're on social, StockTwits, Twitter, Facebook, right, LinkedIn, whatever your favorite flavor of choice, make sure you follow me on social in the lower left-hand corner, right? How about those charts from tonight's video? How easy is this? All the charts from tonight's video, you can have them on your computer for download, ready to go for tomorrow, right? Download those charts, have them ready for tomorrow by following that link below the video tonight on the blog. And speaking of tomorrow, how great is this? Right? Grab that free pass, upper right-hand corner. If you're not a member here at School of Trade and you'd like to get a deeper dive and see how we apply this strategy to a real chart, grab that free pass in the upper right-hand corner. Come out and join me tomorrow as a guest in that trade room. And don't forget, if you have any questions, you can always call, email, drop me a comment, or hit me up on live support on the right-hand side of the website. All right, let's jump right in, guys. We've got a lot to cover here tonight. It is great to be back here with you all once again. Hope you guys had a wonderful, wonderful weekend out there. We're back in the action, and as promised from last week's newsletter, we talked about the volatility kicking up, right, as we go into the end of the month, and that's exactly what we saw today, and we expect to see this, right, in continuing here tomorrow, right? So don't forget, tomorrow is the last day of the month. At the end of the month, we always expected to see a little bit more volatility. And most importantly, we start watching those prior month levels, You're going to see those come into play on a number of charts here tonight. So it's volatility, right? Volatility and prior month open, high, low, close levels. That's going to be our magnet for tomorrow. Now, that's the basic strategy for tomorrow. volatility and prior month levels. As far as news goes tomorrow, we get the personal income number tomorrow, right? Personal income and outlays, that's inflation. Inflation is dollar, dollar is gold, dollar is euro, right? So we're talking metals and currencies early tomorrow, right? That is what I would expect. The biggest impact is going to be off of that news tomorrow, personal income and outlays at 8:30. Now, you may also see up there the FOMC meeting begins tomorrow. That's not going to have too much of an impact on us until later this week. We've got the FOMC announcement on Wednesday afternoon. So that won't affect us too badly tomorrow, right? But come tomorrow night's newsletter, we'll definitely be talking about how to deal with that FOMC announcement among everything else coming out on Wednesday as well. Looking forward here later on this week, we do have the employment number on Friday, the first Friday of the month. That's a big one coming up later this week. So we got the FOMC announcement on Wednesday afternoon, employment number on Friday, right? It's going to be a busy week. It's going to be a busy week here. We get the end of the month tomorrow. Personal income early tomorrow, right? We get the FOMC on Wednesday. Thursday will be a bit of a question mark right now, depending on how the FOMC announcement goes, and then we'll go into the employment number on Friday. That's all fine and dandy, but we got to worry about tomorrow, right? Tomorrow is the most important thing right now. Let's get ready for tomorrow. Tomorrow's the 31st. Increased volatility, right, and those prior month levels. Now, one of the only charts that does not have any prior month levels here to worry about right now is the crude oil, right? Crude is well above its prior month levels right now, so no need to worry about those creeping in. But we do have, as you can see here, a very obvious situation developing here for tomorrow. Crude is bullish with a strong run higher up to that double up target this morning, where it then proceeded to just turn sideways and pretty much just fall asleep on us for the rest of the day. This is really the only market here today that really didn't kick up that volatility as we were expecting. Momentum in this situation is clearly bullish, but this lack of follow-through for the bulls tells me that buyers have likely grown weary of buying at such a high price. So my plan, of course, is to look for buying opportunities at a much lower price. And I've got my eyes on that battle zone, which is really the combination of that 54 reversal line along with that range expansion support, right, waiting below. So as I look at this market here today, we saw this, of course, in the trade room this morning, right? We saw a strong move up, a very shallow pullback. The fact that that did not pull back to the moving average is a big clue. It means it's not a measured move. It means I'm going to take this leg here and basically project it here, right? And that gives me my double up. I can also take that level, project it higher again, and we have our triple up, right? So the double up, again, it's pretty much just this leg here to that leg there, and then, of course, up again, right, the triple up. That's going to be where we assume these buyers are going to try to run to tomorrow, right? That triple up at 71.02. Now, we can easily see the trend is nice and bullish, but it looks like we have a case of the 70s right now, right? It looks like we have a little bit of a round number situation going on right now, where it looks like these buyers are pretty comfortable around this $70 a barrel. Momentum is bullish, right? It's too bullish to be a seller on this, but obviously with lower highs, right? Without seeing any real proof of this market going higher here, we have to assume the market's getting pretty comfortable right around this, again, 70.28 to 60, right, 996 or this range here. Now that range is a big clue, because what I can do is I can take that range. I want to be a buyer, and I want to buy below the low of the range, right? I want to buy low and sell high whenever I have a range. Well, the problem is selling high is probably not going to be the best idea because the market's bullish. So we're going to focus on buying low, right? That's my focus here for tomorrow. And ultimately, the range tells me there are two patterns I'm looking for. One is going to be a seller failure. The other is going to be what I call the fake out, breakout, pullback pattern up above those highs. Now, the first pattern we're looking for here is going to go lower, right? This is where the magic happens. And what I'm looking for is, I'm looking for what I call a two-try failure pattern. My goal is to buy below the low of this bullish bias trading range. And to do that, I want to see the sellers try once to break out, try twice to break out. This is where the term two-try failure comes. And then I can look for that buy now, basically buying into the stop losses of those sellers. Now, that will usually be good for a nice rotation back up to the high of that trading range. Now, if we get lucky and we get a real strong move higher, what I'll then look for is try to get the moving average up above the top of that range. If I can get the moving average up above the top of that range, then I like to use what I call a fake out, breakout, pullback pattern. And this is going to be a two-legged pullback into a rising moving average. The moving average, again, has to be above that 70.28. So those are the two basic ideas, two basic patterns I'm looking for here tomorrow. One should be relatively easy. One try, two try, failure, maybe a pullback back here if we get lucky, right? One try, two try, failure into a pullback back to that high. The other one's going to take a little bit more punch, right? It'll take a lot more strength. We saw an example back here where buyers tried to break higher here and they couldn't get anywhere going, right? So we got to be careful. Want to see a strong move up, two-legged pullback, and again get that moving average up, and that's going to be our entry, right, for the buying off that range high. Again, target for the buyers up around that 71.02. If we do get that breakout going higher, 71.02, right? If we get the pull back, one try, two try, failure, strength, pullback, right? The objective is to go back and retest that high, right? So you always want to know where those targets are. I've got my eyes, though. Take that trading range, copy and paste it down. I've got my eyes on that 94 level. I've got my eyes on this 54 level. These two areas right here are really on my radar right now. The market's clearly bullish. I want to buy at support, right? No better place to find support than to use the size of that range to bring us down, right? A prior swing high as support, right? I've got this as my battle zone, but really it could be, right, this whole area right here. And again, once we pull back, I'm expecting to see those sellers are going to try to sell that pullback off the moving average. I'm going to look for their failure and look to be a buyer right into their failure tomorrow. Now, last but not least here, how do we reverse? What does a reversal look like on this? A reversal has to have that strength, that pullback where? Pullback to the moving average. And then what? And then that strength. Right? It's got to be strength going lower, pull back to the moving average, strength going lower. What do we call this, guys? We call this the 1, 2, 3 reversal, right? That 1, 2, 3 reversal. And as I always kind of joke around by saying, the reason why there's an explanation point on the end, or exclamation point, excuse me, on the end of that reversal is because there needs to be an exclamation, right, to that move lower. I got to practice my English, right? So we got to see that strength moving lower. If we can get that strength, then we can come out. I can draw a new channel, and I can look to sell off the high of that channel. Okay, target at that point now is back down to this low at 68.80, right? But in all reality, that big low from last Friday at 68.26 could also be in the cards there tomorrow. So buyers, I'm looking to buy low, right? Two-try rule. Failure, strength, pullback pattern, or the fake out, breakout, pullback pattern right through that high. Now, are you here for the first time today? Is this your first time joining me on the nightly newsletter? Wonderful. We're going to do this newsletter every night, Monday through Thursday, right around 7:15 to 7:30 is usually when I get the email out to everybody and publish it on YouTube. If you're here for the first time, though, I want to give you a head start, right? Rather than having to go back and watch all the old newsletter videos to learn all the terminology, to learn all the patterns, I want to give you a free trading course in the upper right-hand corner. Pause the video. Grab that free trading course. Okay, I'll wait for you when you come back. Trust me on this. all the terminology, all the patterns, all the technical analysis tools, channels, ranges, spiking channels. It's all wrapped into this beautiful free trading course for you guys. Register on the website. Whether you're brand new here today or maybe you've never gotten around to taking that free class, now's your chance to grab that in the upper right-hand corner, right? And again, it'll be there waiting for you, right, all the entire session here tonight, right? So grab that information icon. That'll take you to the website, and you can register for that free trading course. Let's keep going. Got the crude oil looking good. How about some S&P? How about some S&P? S&P is range bound with a range breakout as those sellers try to finish the month back down at the prior month high tomorrow morning. The strong breakdown is the key here, giving me reason to start looking for selling opportunities up at the high of these spike and channel patterns coming down overhead. But I'm in no hurry to sell, though. Because if I don't get a good signal, right, this price could easily slide back up into that range and run all the way back up to the highs of that range tomorrow. Now, as I promised, right, we would see a bunch of these prior month levels. Prior month high at 27.96 is a big price magnet here for the S&P. Remember I said tomorrow's the end of the month, so we are going to start seeing those prior month levels, right, kick into gear. I've also got my eyes on a measured move. That will also be a target tomorrow. If I had to guess just off the top of my head, I would say we'll probably finish off that measured move and then find our way back up and finish around that prior month high, right? So just be careful if we do get that measured move tomorrow. Be careful being too aggressive down here because you got that prior month high, which is pretty much just begging, right? Just begging to be kind of the final resting place, right, for the month of July tomorrow. At the same time, I think there are a bunch of really big clues in addition to that prior month high. The first one is this: strong move down, pull back, double bottom, pull back. What is that? Yeah, it's a double bottom, and that's a double top. What does a double bottom in a bear market tell me? Trading range. So we know that's a range. Now, just like on oil, right, I'd like to sell up above the high of that range if at all possible. But as of right now, right, it doesn't look like that's going to be, right, realistic, at least not yet, right? We may be seeing that, right, towards the end of the session tomorrow morning, right? I also going to be really careful about selling down here, right? Remember, we want to sell high. We don't want to sell low. Well, what about that fake out, breakout, pullback pattern? Well, you'll notice, right, we got the moving average down below that trading range, but all we got was this crazy one-legged move here. Now, that didn't end up being the fake out, breakout, pullback pattern. But you can see the buyers, right, getting in here on a failure and the price going lower. So late this afternoon, we did have a variation of that fake out, breakout, pullback pattern in the form of a buyer failure, right, strong move down, one try, two try, buyer failure pattern, right? Same patterns here. We go up, one try, two try, failure, right? Again, we're bearish. We go above the moving average, one try, two try, failure into pullback, right? This happens all the time. Okay, so that trading range is big time. Trading range is a big clue because if we can't hold below this range, this is going to go right back into the range. It's going to run back to the top of that range. And guess what? It's going to be a pretty bullish market when that happens, right? So if we do reverse here and go higher, this could easily turn bullish, right, as that momentum takes off to the upside. That is something I'm watching closely here for tomorrow. For right now, though, we have no reason to believe, though, this range is going to fail. So I'm trying to find some level of resistance so I can sell in this bear market. Okay, I know we have the low of that range. That's going to be resistance. But more importantly, again, bear market, find levels of resistance. Let's see if we can't find some hidden channels here. Let's draw off those lows. I draw off that low. I bring it up to that high. That gives me one level of resistance now waiting overhead. Okay, I don't like that one as much, though, as I like this one. This one now, marking up those two lows. Marking up to the high now, right? That gives me another level of resistance. Now, question, why do I like this one better? Why did I say that? Why do I like this one better? Well, because in the world of technical analysis, you never want to skip over an obvious swing. So if I draw a trend line like this, you notice how I'm skipping over that level right there? one of the things we talk about in our intermediate class is that whenever you're drawing trend lines, whenever you're drawing channels, the most reliable channels are going to have recency and accuracy, which means they'll be the most recent, right? This is the most recent. Those are two low. Those are two most recent lower lows. This is the most recent channel. This will be the fresh in our minds channel that most people will want to participate in. But more importantly, though, right? There's no other way to draw that, right? There's no other way to draw that channel. There's nothing up here that I missed, right? But if I draw the channel like this, now you could easily argue and say, but wait a second, what about that right there? What you're gonna selectively, right, ignore that? You see what happens? We can't do it that way. That's why I say, right, this is a much more reliable trend line because you're not skipping over anything, right? Unlike the other one. The bottom line, though, is I'll take them both. We'll take that trend line, put that up. We'll take the other one, right, put that up, and that creates an area of resistance now that I can look to be a seller. Okay, in a bear market, I want to be a seller, right? In a bear market, I want to sell at resistance. So now here we are. I want to sell at resistance. I've got to get the price to go up, right? So I can sell it back down. Here are a couple options I'm looking for here tomorrow. One is going to be a move up into that battle zone. I'd love to see this with a trap high, right? I'd love to see it there with a trap high. As we go up into that battle zone, the buyers are now going to try to buy this. The buyers are going to try to send this market back up into that range. What I'm looking for is I'm looking for a pullback, and I want to see that pullback allow me to sell without selling into the low of the range. Okay, so for example, the low of that range is right there. I want to be able to sell into the stop losses of those buyers, and I want to do it below the low of that range. What I don't want to do is try selling into the low of that range, right, just below that 28.10 area. What that will do is that will give me the chance now to sell off the high and then wait for that pullback and sell back down to that low. Again, this is going to be a two-try failure pattern, right? A two-try failure pattern. One try for the bulls, two try for the bulls. Once we see those buyers try twice, and again, this is the exact same sequence we saw back here, right? Strong move up, buyers try to buy the pullback, they fail, we cruise lower, we sell the retracement off the moving average and back down. It's the same exact pattern we're looking for coming off of that battle zone tomorrow. Okay, that's if price goes higher, and again, one try, two try, failure, strength, pullback, right? Pullback, back down to retest that low. And again, if you want to see literally hundreds of examples of these sequences, grab that free trading course in the upper right-hand corner. Grab that free class, that information icon, right? You won't be disappointed in that. You learn a ton off that free class. Now, what if we go sideways here, right? What if we go sideways here? If we go sideways, not much changes. It's still a bear bias, but now we're going sideways. What do we do now? Pretty much same thing. One try. Two try, right? Buyer failure. Now, we can sell off the high of this range if we go sideways tomorrow. But what about down here? Do we really feel comfortable selling down here? Probably not, right? So if we do get that strong breakdown, what you want to really look for is anytime you find yourself in a position where the only option is to sell low, you resist the temptation to chase after it, and you look for a trap pattern, right? That's going to be, if we go sideways tomorrow, right? I want to give you all the options. If we go up, if we go sideways, and what's next? If we go down, right? If we go lower here, same basic principle, right? If we go lower, my focus is on traps, because at that point, we're going to want to stay away from that prior month high, because that will act as a magnet, but will also act as a level of support. So as we go lower, if we don't pull back and give me a chance to sell high, right? As we go lower, it's traps, right? Traps are going to be your number one priority tomorrow morning if we don't pull back, right? If it just grinds lower. All right, guys? Last but not least, how do we turn bullish? A bull market would do what? It would be strength, pullback, strength. Going back to this example again, we saw a great strength move here for the bulls. They pulled back. But what didn't they do? They didn't give us that follow through, And you can see every time the market, strong move up, pull back, fail, sell it. Strong move up, pull back, fail, sell it. Strong move up, you get the point. Pull back, fail, sell it. So far, there's no reason to think these buyers have control of this market. What would it take for them to take control? Strong move up. How strong? Strong enough now to get that moving average to follow suit. Then I'm looking for that pullback to the moving average. I would love to see it above the low of that range. That would give me a whole lot more confidence. Then from there, I'm looking for that strong break higher from there. Right? Now I know, we all want to buy that first pullback. But remember, if you buy that first pullback, you're going to be this one, this one, this one. How did those pullbacks turn out? Not very good for those buyers, right? So let's not make the same mistake that they did before. One try, two try, gone. Wait for that, right? Wait for it, because if they fail, you know what's going to happen? It's going to collapse back down to that range. It's going to be 1, 2, 3, reversal, right? Exclamation point. Now what do? Do we chase after up here? Oh, hell no, right? We don't chase after it. We find that new channel, and we look to buy off the low of that channel. Now, this is where location is going to be critical, because if we have the top of that range, I'm not going to want to buy into the top of that range, right? I'm going to want to buy either on the way back to the top or going through the top of the range. And then remember, at that point, where's our target? Our target is we take this range, we measure the amount of the move lower, the amount of the move higher, you got it, there's your target. It's going to be just shy of that range expansion level, right? Because you can see they went just shy of this range expansion level here today. All right, guys, got a good plan there for up, down, sideways. You're even ready for reversal tomorrow. Now all we need is to see what happens. Next up here, how about some Nasdaq here? Now, Nasdaq is clearly bearish with a spike in channel pattern as it tries to complete the measured move and possibly a larger run down to the prior month close as we finish the month tomorrow evening. The spike in channel is a big clue telling me to look for selling opportunities using a deep pullback off the lows tomorrow. So my focus is staying patient and waiting for selling opportunities with buyer failures up around that battle zone tomorrow morning. Now, I mentioned earlier that prior month level. Where is it? There it is. Prior month close, 70.67 there on the Nasdaq. That is going to be a little bit of a pipe dream right now. It's a little bit much to be expecting here out of that market for tomorrow, but who knows? Right? That's a thing, right? Could easily be, right? We could easily see that Nasdaq finish off, right? That move down to that prior month close at 70.67 3/4, right? Other than that, it's up to 58 here, right, to get that prior month low, I believe it is. Yeah, prior month high, 73, right, 58, will be right around, right, this area here, right? So sellers are trying to get that prior month close, right? That's going to be their big objective there for tomorrow. At the same time, we get a pair of spike and channel patterns here in the Nasdaq right now, right? Here's one of them. Big strong move down. I'm drawing my trend line off of those lows. I'm bringing it up to that high, and I want to sell at resistance in a bear market. That's a major level of resistance up around the high, right, of that channel. If I zoom in a little bit closer, you can also see there's also a smaller spike in channel, which is kind of the midline, right, of the larger spike in channel. Not as pretty as the bigger one, right, but that's your smaller one. Now, what do smaller spike in channels tell us to look for? They tell us to keep an eye on the base of that channel and look for that sell up at the base of that channel, right? So when we see a spike in channel pattern that's doing this, after I see 1, 2, 3 legs lower, I now know we're most likely going to be seen as too low to sell. And so sellers are always trying to sell high, right? Where would they sell high? Draw that channel. Look back at the first pullback of that channel. That's where sellers are likely going to be hunting for. I want to see price go up. I want to see buyers try to buy the pullback. The moving average, of course, will be coming over here as well. I'll look for those failures, right? That failure into strength, strength into pullback and retest, right, of that low. Same pattern we just talked about on the on the S&P. So that's the idea here. Strong move down into a channel, right? There's the first pullback. I want to go up and back down, right? So two spike and channel patterns, both of them telling us to get that market up so we can sell it back down. What else do we have as far as resistance goes here? A beautiful reversal line there at 72.51. And if you look closely, nope. Only counts at horseshoes and hand grenades. We're not close enough on that one. 72.51. It was not tested. That might just be our biggest clue here this evening on this chart, right? That 72.51 lines up beautifully with a prior swing. That becomes the battle zone. It lines up at the top of that spike and channel. It fits in with the idea of the base of that spike and channel. That's where I want to be a seller here for tomorrow. So let's play that game. What if price goes up? What if price goes down? What if price goes sideways? Price goes higher here. I hope it goes higher. We're now looking for basically three different patterns here. One is going to be a trap above a prior swing. That trap pattern will likely be met by buyers trying to buy the pullback, right? Let those buyers that buy that pullback, we know where their stops are, we can then sell right into those stops. Now, if we do this the right way, selling high into a buyer failure, that should result in a pretty strong move lower. That strong move lower will bring the moving average down. Now we can sell the moving average as a pullback, and the target is down to retest, right, that measured move, or to finish off that measured move, I would say. So again, we've got a trap pattern of a prior high, a buyer failure, right, a two-try bull failure pattern off the moving average, right, and then again, the pullback pattern to the moving average, right, and again, if you want to see literally hundreds of examples of these patterns on real charts, grab up in the upper right-hand corner, grab that free trading class, right, and then that way you can get a much deeper dive into this trading strategy, all right, so that's a price goes higher here. Now, end of the month, could this possibly be a trading range here tomorrow? Oh, absolutely, right? Let's not kid ourselves. End of the month tomorrow, as much as I think we're going to get some extra volatility tomorrow, we may start seeing this thing go sideways, right? If we start seeing this sucker, right, sideways here, double tops, double bottoms, if it feels lifeless tomorrow morning, we're going range bound. We're still bearish. That hasn't changed. And so in a range-bound market with a bear bias, what do? We sell high, right? What do we do it with? One try, the two-try failure, right? Two-try failure. Or what else? The fake-out, breakout, pullback pattern. What does that require? It requires one try, two try above, moving average be your trigger. And again, below, come on, Joe, draw that the right way, right? We get below that low. We're selling high, or we're making sure we see enough strength going lower so we're not selling low, we're selling high, using it as resistance. Now, what if the market goes lower here tomorrow, right? What if we go lower? If we go lower, we're going to be staring down the barrel of that measured move. So if we go lower without a good pullback, anytime I find myself in a position where the only option is to sell low, what do? Traps, right? Look for that trap up above that prior swing. Any of them will work. Just stay away from selling into that measured move. Last but not least, guys, what does a reversal look like? Three things, right? Strength, pullback, strength. Good example here. Here we go, right? Strength, pullback, no strength, failure back down, right? Strength, pullback, no strength, failure back down. Strength, pullback, no strength, failure back down, right? Remember, if we go up and those buyers can't hold that pullback and really run on strength, right? The reason why they got to show strength is we have to know for a fact these sellers are walking away from this market. They got to hold that pullback. If they don't hold that pullback, failure into bear strength, bear pullback, back down to retest that low. Strength, pullback, strength, new higher high. Find that new channel. Buy the low of that channel. Sometimes I get lucky and I can use the top of that first swing as support as well. We're going to buy the low of that channel. Where's my target? Target is back up to retest these highs. right? Back to retest that 73.23, right? Even back up to retest the bigger highs. That's going to be a bit of a pipe dream tomorrow, though. So right now, buyers are trying to get up to that 73.23. Sellers want to get up and then back down, finish off that measured move, and who knows, right? Maybe we see that prior month close, right? In our crosshairs tomorrow. We'll wait and see. Let's keep going. From the Nasdaq over to the gold. Now, gold is range bound and trading in the middle of a triangle or a range after a contract rollover to the 12-18 contract this morning. This tells me, of course, to fade the breakouts, buying low, selling high, and avoiding the middle while focusing on failures for the most reliable trading opportunities, right, tomorrow morning. Now, this kind of caught me by surprise. I didn't realize, right, how close we were to contract rollover. I apologize for not giving you guys a heads up last Friday on this, on the last newsletter. Came in this morning, gold volume was drastically low, and we quickly learned that gold had rolled over. Now, if you're wondering what happened, remember, every couple years, gold has this weird rollover schedule where it skips the 10-18 contract. So make sure you double check you've got the right gold market right now, and that's 12-18. Now, in NinjaTrader, these are NinjaTrader charts, by the way. In NinjaTrader, gold has a kind of a weird rollover schedule, and so oftentimes NinjaTrader will have a difficult time blending or merging the previous front month with the current front month. So you'll notice I have what's called merging turned off on this. Go into your instrument manager, double click on the gold contract to open up the instrument editor, and change the merge, right, to do not merge. So if you're on NinjaTrader, you're going to want to basically change the instrument of gold, the GC instrument, and change the rollover settings to not merge. That will solve that problem. It's kind of an ongoing. Again, the problem is because gold has such a weird rollover schedule to it. The good news is, though, this is the only time of the year it's that rollover between the 8, the 10, and the 12 contracts. So it's not going to happen very often. It's literally once every couple years. You can find more information on the CME group. The bottom line, though, is we're trading the 12-18 contract. I've got my contract merge turned off just because that's the only way to get the charts to work. That's why they look kind of weird here tonight. The good news, though, is by tomorrow night, this will be right back to normal again. Now, with that said, when we do have rollover and the rollover jumps that one contract month, right, that month of November, the month of October, excuse me, you can assume there are probably going to be a lot of traders out there who are not listening to this newsletter, although they should, right? And they're not going to really know this information. So tomorrow could be another day where we might see some relatively low volume, where the market's kind of figuring out, wait a second, what contract are we trading? But again, the volume doesn't lie. The volume is all stacked up in the 12-18 contract right now, right? So make sure you're on that 12-18 contract as well. But I won't be surprised tomorrow if we do have a little bit of trouble getting some good personality just because of this kind of oddball rollover. We got no levels above, right? We got no levels below. I've got my lower highs, my higher lows, my flat moving average. This is a range-bound market. And anytime I have a range-bound market, I want to follow the directional bias, which you can easily see as bearish, right? Bears coming down basically into a trading range. And this is really how I want to trade that range. Once I find that triangle, okay, I know I have a bear bias to it. The most important thing you want to remember to triangle is the edges, right? That edge, that edge, that edge, that edge, right? So really go out, right, and mark up those levels as resistance, these levels as support. Now, what I want to do is I want to sell high using those swings. I want to buy low, and most importantly, I want to avoid the middle. Okay, avoid that middle. The middle is going to be challenging here, right, on that gold. So sell high, buy low, avoid the middle. Now remember, there's a bear bias to this. So selling high is definitely going to be the preferred method of trading tomorrow. But we can definitely get long off those lows if we can find, right, the right situation. Okay, so here's my range now. right? Here's my range. Here are my edges, right? Edge there, edge there, edge there, and edge there. Those are the big levels to remember for tomorrow. Now the easiest trade here is we go up, one try, we pull back where? Pull back to the moving average. We see a two try, right? And those buyers, right? Those buyers try once, they try twice. When they fail, we sell into their failure, right? When the buyers try once, they try twice, we sell into their failure, right? And back down we go. So look at this chart right now, one try, two try, failure, strength going lower, stay away from that middle, sell up around that high, back down into that range. Again, it's the two try failure. We've talked about that how many times now? Same pattern as always, two try failure. Okay, if we can get the drop off the high there, then we can look for the pullback pattern, right, coming up next. Okay, sometimes what happens though is we get something like this where it'll collapse back in and then it'll go sideways right in the middle, right? If that happens, the plan is traps, right? Traps. Get up, sell back down. Want to sell up around those highs. Just stay away from that middle. Okay, so one try, two try, failure, strength, pullback, back down to that range. Now, when I'm selling off the high of a bear market, I can sell failures and I can sell pullbacks. But when I do the same thing in a bear market trying to buy the low, one try, two try, failure, pullback. Okay, the problem with this now is I'm now trying to buy, but the market is bearish. And we're going to see a great example of this on the euro here in just a second. So make sure you stay tuned on this. And you're going to see why I do it this way. Because last Friday, we saw a bunch of head fakes on the euro that if you followed this plan, you wouldn't have been stopped out for. And we talked about that last week as well. What I'm looking for here is I want to now get above that moving average and buy that pullback. So it makes sense, I think, right? The market's bearish. If I'm going to be a buyer, I need to get momentum back in my favor again. So just trying to buy that failure is not enough. Because what happens is it'll go one try, it'll go two tries, and what will happen is sellers are waiting up here to sell it again, right? Whereas if this was a bull market, those sellers would fail and price would run up. So what I'm waiting for is I'm waiting for that strong move up, then I'll buy the pullback from there, right? Then we'll buy the pullback from there. So it's basically, rather than taking the failure, you're waiting for the failure because the odds aren't very good on it. You're waiting for the failure, and then you're buying the pullback from there. All right, guys? Now, what would it take for a breakout here? What would a breakout look like? Well, we have the two-try rule, right? One try, two-try, failure. A breakout is just like a reversal. 1, 2, 3, breakout. So what do we see? 1, 2, 3, right? 1, strong move up. 2, pull back to the moving average. 3, breakout, right? Remember, exclamation point, right? Breakout. Yeah, not explanation point, right? Yeah, exclamation point. Find that new channel, buy that pullback, right? And again, I like to always look and see if I can combine that prior swing, right? So again, if we do see a real strong run here, and that goes both directions, right? 1, 2, 3, breakout, perfect. Find that new channel, sell up the high of that channel, right? Be aware of your surroundings, measured mover down here, right? Just be careful. If we're going to go lower, it's got to be real strong, right? Got to be real strong. So stay away from that middle, buy low, sell high. Remember, selling high, that's going to be the path of least resistance. And again, don't force it tomorrow. If we sit here pretty quietly tomorrow morning, we know why. It's because we're still waiting for this market to kind of catch up to its contract rollover. You'll see what I mean tomorrow, right? It was pretty slow today, and so we'll probably see more of that, right, tomorrow as well. Wrapping up tonight here on the euro, boy, do we have quite a bit to discuss on the euro tonight, don't we? Wow. Euro's bullish with a strong move higher, sending us right back into the range we spent most of last week inside of. The momentum is clearly bullish right now, and that tells me to look for buying opportunities at support levels such as the low of this channel or this rising support trend line. But the trading range, Remember, whenever you have a range, the range is priority, right? The range takes priority. This trading range is an important reminder, though. Avoid trading breakouts above that range. I don't want to buy into this range right now. I want to buy the low of this range. Now, you'll notice here on the euro, you can see where we are right now. Oh, well, how convenient. Right at that prior month close. So don't be surprised tomorrow if we go up, back down, down, back up, and we finish right around that prior month close tomorrow. But I'll tell you, the big story here is this trading range, right? That's the big story. Now, a couple things, right? We had this last week. This is the same range we used last week, right? We had a bear bias going into this trading range, right? So we talked about the fact we're looking for one try, two try, failure, pull back in. But if you remember last Friday or last Thursday night's newsletter, right? We had this big strong move down. Remember this from last Thursday night? And what did we say? We said do not try to buy failures here. And look what happened, right? A couple times here now. Remember, this is the trading range. We're looking for that move going back into the range, right? This comes off of last week's newsletter, right? That's why it's always a good idea to tune in every evening, if not just to watch your favorite market, right? So last week's newsletter, we're coming off the high of that range. We're seeing a big pendulum swing down now. Momentum is clearly bearish, right? We don't want to just buy that failure. Look what happens here, right? So we're trying to go back into the range from last week. What do we see? We see one try. We see two try. And again, if it was a bull market, you could buy that failure. It's a bear market though, which is why you sell that failure. You sell that off the high, right? You don't apply the same pattern here. Same thing happened again. One try, two try. Look what happened. Failure, not so fast. Try to slim it back down again. But look what happens. Once we finally see that one try, two try, and then up, look what happens. Everyone's waiting to buy that pullback. You see what they do, right? The sellers look at this and they go, the range traders look at this chart and they go, okay, I want to be a buyer going back into that range, but I don't want to mess with trying to predict which of these moves fails. It's not reliable enough, right? So when the market is bullish, right? When the market's bullish, yes, I can buy off those lows. But when the market's bearish like this, right, we've got to wait for that. Again, that get back above the moving average, and then, right, there's your pullback. What we just talked about there, right, on the gold. So now, here we are. We're back into that original trading range again, right? Now we're back into that original trading range again, but this time momentum is screaming higher here, right? Momentum screaming higher. What do? One leg, two leg, three leg, triple measured move, all the way back up into that range. Now remind me again, what's the plan in a bull market? Buy at support. Where can I buy at support? One level of support is the low of that trading range. Another level of support, rising support trend line, jackpot. Another level of support, hidden channel coming off of that low, right? So look at all this come together right around that 17.3 to 17.2. We've got a beautiful opportunity here at the low of the range. We also have, right, again, channel low, hidden channel low, right? Little tiny trading range down there. It all lines up around that 17,300 to 17,200. That puts me at the low of the range. It puts me at multiple support levels, and it gives me a chance to follow the momentum of this market. Last but not least, how do we do that, right? How do we do it? We want to see a pull back. As we pull back, what's going to happen? Sellers are going to try to sell that pullback. Right? If they take it, sure. 1, 2, 3 reversals. Sounds good, right? Momentum will change, and we'll just sell off the high of that, right? Off the high of that channel. Target back down to retest the low. Okay? That's the option for the bears. But assuming the bulls, right? Assuming the bears don't hold it, we're looking for that failure into strength, that strength into pullback, and pullback back up, right? Failure into strength into pullback, and pullback going back up now to retest what? To retest the high, right, of that trading range. Okay, that's my plan for the buy side tomorrow. Now, what else could work here? Well, remember, this big move down, this pendulum swing is swinging hard now, right? The amount of the move lower could easily be the amount of the move higher, right? So this thing's really got potential here to really run. I would assume the buyers are trying to run back up to the 17,900 area, right? The high of that last move. How do we do this though? Good question. If I zoom out on this is coming from last week again. If I zoom out on this, you can see I've connected these lows, right, up to those highs. And so this is going to be a little bit of resistance. I want to use that resistance as support tomorrow morning. So the next step would be if I can get through it, get that moving average above it. Now, look what's happening. Now I have the ability for almost like an identical fake out, breakout, pullback pattern, but now I can use it on top of the range and on top of that trend line, right? So that's the green light there tomorrow, right? Again, that fake out, breakout, pullback pattern up above those highs. So remember, you got to get the moving average up, and to get that moving average up, it's going to be a real strong break higher, right? It's going to be a real strong break higher. So for the buyers here tomorrow, 1 try, 2 try, failure, back up in, right? Or strength, pullback, buying off that low to finish off that move, right, up to that high. What if we go sideways here? What if we sit? If we sit, the market's bullish. 1 try, 2 try, failure, right? Fake out, breakout, pullback above that high. We've talked about this, right? You know the rules to that stuff. We talked about it earlier, right? If we go higher. And then again, we know what a 1, 2, 3 reversal looks like if we're in reverse this trend as well. All right, guys, great stuff here on the euro. Where will we close tomorrow, right? Any bets on whether or not we close right back or we ended today's session? The odds are pretty good for that, that's for sure. Don't forget, guys, I've covered a lot here tonight on our newsletter. Grab that free trading course in the upper right-hand corner, or go to the website here at schooloftrade.com and join our free trial. I'll shoot you an invite. Come join me in the trade room as a guest. I'll send you that free trading course. That way you can learn to make the most out of this nightly newsletter. And don't forget, I have beginner, intermediate, and advanced classes for registration on our website. I'll put all the links in the description of the YouTube video. And if you have any questions, you can always pick up the phone and call me toll free anytime you want. I'm always here in my headquarters in Los Angeles, or you can always hit me up on live support, right, if you need any further information along the way. Guys, thank you so much for tuning in here. It's going to be a great day tomorrow. I can smell it. Will you guys with me tomorrow? Are you joining me tomorrow morning in the trade room? If so, I'll see you tomorrow, 8 o'clock Eastern time. If not, we'll do it again tomorrow night as we get prepped up for our big month of August. Guys, as always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.